Good morning, everyone. All right, so markets are up here. Yesterday, we had a little bit of a baby correction day, which we did quite nicely with our short intraday there. We caught this decline. It was really on the 5-minute that we got on board with a continuation pattern, and we nailed it virtually off of the low where we covered it. It was very good. So, and as I explained yesterday, while we were short, right, little short-term bearish price action, I said the hourly's in an uptrend. And so here we are pulling back, or did pull back into the gap fill there. And now we've got, buyers stepping up, and now it's moving up, which is, in a little bit of an, I guess it is an alignment. We'll see if it actually gets there, where we talked about the potential of a measured move where prices moving higher. I think I still got the markings on the chart. There you go. Markings on the chart there, where yesterday where we talked about this beginning move, right? The momentum move off of the low here, which was a bit of a surprise, quite honestly, after the break. You got a breakout failure here, or a new high reversal, and then a big red bar, and then the gap down, and then into the gap fill, and a nasty big red down, and then support holds, and here we go. So in the letter, I coined this Mr. Schizophrenic is back. That was in Monday's letter. So now, as prices are moving up, not that this has to happen, but it's a relatively common occurring pattern when you see a kind of a blast like this, and then when it stalls to reverse, it immediately reverses back in the other direction. So we'll see if it actually plays out. So far, it does look like it might, with the price action that's going on. And so yesterday, the back off that we saw was just an intraday trade that we took advantage of within a daily and hourly uptrend, but it was a retracement within the uptrend. Right? So intraday, we can take advantage of counter trend moves at the appropriate time. And that's exactly what we did. All right, so let's take a look at some of the other markets. The Qs, again, they had that same correction day pullback into the gap fill. Let's just get rid of the red bar for now. And so we always mark off our reference points, and the gap fill is always a reference point. So you see those in the green room, you see on my intraday charts, there's always this blue line and green line on my 5-minute charts, which is one is yesterday's close and one is today's open, because they're great reference points intraday, where especially for the markets that prices react at. So that's why I track them every day, and because they work, And so now, same situation, but here we see the gaps, where it gapped up. When you see the gaps, because the futures are trading almost 24 hours. So you get, completed bars. So now prices here on the Qs, 233-ish, gapping up toward the top of this bar. Be better if it was exceeding it, and then we'd do the same thing, right? Looking for the top of that bar to be support. Whereas now, the top of that bar, looking at the 60-minute chart, this is 234, is actually resistance. So when we look at this intraday, this gap up here, kind of weird in the middle of the night. I don't know if that's real. Maybe not. Yeah, it probably is. The futures went up and this started trading. So now, assuming that this continues to push up, well, we will use that. I'm just copying this. We'll use that as our first reference point of resistance, and we'll see what the reaction is to it. Now, based on this price pattern of a measured move, prices should get through that and keep going up. That doesn't mean that they have to happen in the moment exactly. From an intraday trading point of view, the same thing like didn't mean that this couldn't pull back and then continue higher. So we're playing multiple time frames, daily chart, intraday charts, and looking to take advantage of what's happening in both at the appropriate times. And so from an intraday trading point of view, as we saw yesterday, we can be short with a daily trend that's going up after prices gap up and pull back to support, cover our shorts, and now we'll see what happens today. New day, and we'll just see if this can continue to march higher. Excuse me, losing my voice here. So 190, let's just call it 190, 168-ish. So gapping up to the area where it's failed from before. Let me get some water, guys. Or I'm not going to make it. So gapping up to this area where it's failed from, and the same story here at the open, we're going to see, can it hold on to that move up after the market opens? And if it does, this just might be a great day trade, and even maybe for a swing. I don't really care for it as a swing because the move started here, but it doesn't mean it can't keep going. But certainly for a day trade, trading the Russell ETF long or the futures up to that high could be a great day trade today. So something I'll be keeping an eye on. The transports, just flip-flopping around here. They had the breakout, had the failure. So far, it's holding up. We'll see if they can bring up the rear and get above here. SPX for zero. Let's take a look. We always want to check out SPX or 0 day to expiration trade. And all right, so let me go back to the futures here. So they're up at yesterday's high. Okay. I don't know if I can still, I can still do that. There we go. So we're going to do the same thing across the board here. So far, we don't have a market that's blasting through the prior high. They're opening up at resistance. So we just have to see whether, they flip back down hard or whether they hold it and jiggle around or just blast up through it. A move like this one, which started here, stalled and continued kind of a measured move on its own, really wouldn't surprise me to see this take out the high and then immediately start coming back in again. It's kind of what, the markets do to kind of shake people out, and they kind of jump on board at the wrong time. But, we'll assess that at the open. Anyway, so how far away can we get from the current prices with a 0 day to expiration SPX trade? Well, I think 33.60, if there's juice there, somewhere in that area, Paul. And again, yes, we would need some kind of a topping pattern. Now, remember, the call side may not be such a great, unless we can get far enough away. If the premiums are up there, then it may make sense if we can get far enough away. But yesterday being a corrective type of a day, the call side may not be such a great bet because the markets just might go up because of yesterday being a correction day. However, they have been, rising here a bit up into resistance. So I think we're going to see some jiggles. And I do like the fact that this is consolidating in the area of this prior resistance. So there's been this resting period here for several hours, and that's bullish price action. And now it's starting to push up again. So it might be a little tricky, here at the open. But, if we see a blast to the downside, then we see the put options jump in premium, I think there'll be buyers on the dip, and that could be a good opportunity. Oh, someone in Fabio Toma. We have a Fabio in the green room. Another Fabio. Is Kurt Capper my son? Very fondly, yes, he is. Always, and always has been. Yes, why do you ask? And I'll just let it type. So buyer stepping up 33.50 on the 5 minute, 33.50. Absolutely. That was the gap fill yesterday. So those that are looking at, I don't know, you might be talking SPX, Paul, but I'm here just making reference to the futures. Those that are trading the futures market, right? ES or the micros, you need to look at SPY or just the S&P 500 and know where the gap fill is, because where the ES may be through some support, SPY is coming into a gap fill and you're going to get caught. All right, so enough lesson there. Let me continue here. I'm kind of losing track of myself. Dow, right? There was the gap up, and it's been lagging. It gapped up to this resistance, and then it came in a little into the gap, started stabilizing there. So just this concept of a measured move, that doesn't mean it's got to go directly and blast up there, all green bars. You can have corrective bars along the way. And so now 294.5, 294.5, take 94. Well, it's right up there near the high, like everything else. All right. So we're opening up, and this is what I'm talking about, Paul. All right, McGraw, is that while it's gapping up to the top of the red bar, creating a void below when it opens, yesterday was a correction bar, which is supportive of, it moving higher. Now, this kind of thinly traded here, obviously pre-market. So the ideal scenario, and so we got two things here to consider. And anybody that's interested in trading gaps should definitely go to the site and look at the gap course, because this is one thing that's covered there is when we look at a gap like this, and this bar is like, well, what did it do intraday? How did it create that bar? Was it an end of day decline? Was it basing at the end of the day? Right. That has a lot of effect on the gap. And it's kind of what I'm referring to, or without, I'm getting to this point here, bringing you to the gap analysis. But when we look at gaps, we look at what happened the other day. So with the ES and the S&Ps, yesterday being a correction day, this gap up isn't the same as if it was like this, an end of day advance, and then it gaps up, which kind of, and then you say, well, here that pre-market continued to push up, which kind of like, okay, that's a little bit too much, too fast. We can consider this on the short side, intraday. So I had all good stuff. Because I saw some videos of trading on T3 Live and saw same last name. Yes. So those are in history. I sold all the old courses from the 90s to T3 Live, and they sell that old stuff over there. And Kurt created some of those recordings back when, he was with me over there. Since then, he's no longer there. I'm no longer there. I don't know who's left longer there, but they kind of recycle people there. Anyway, let's Dow 30,000. All right. So we know that this doesn't trade now. We know that it's opening up here. I know it's kind of far, right? But several hundred points is not a big deal. And you can, for something that's at, 29,000 and change. And so again, the idea of the measured move kind of, well, you can see actually puts it above there, give or take. So we'll see, so when we look at these recurring price patterns, historical patterns, and they give us guidance, well, I mean, that's how we trade, because we're price pattern traders. Then we see what actually happens. And so we'll see if this actually plays out as well. All right, keep going here. So futures, Dow futures, everything's going to be the same thing. You see it's up near the prior high, and we'll see if it can keep going here. So the topping tail, for the moment, there's no follow through. And if we were looking at this at the end of the day, and then tomorrow, we'd all be thinking, buy this, it's going to blast off, right? Russell, right, coming up to resistance. You know, we're going to have some headwinds there. Well, right. You're exactly right, Paul. No real resistance except for the all-time high. And of course, that's a positive. Alex is telling me about a 1-to-1 fib extension. No, Paul, Alex, we need fib extensions like 1.78246 on a Elliott wave reversal and a stochastic, followed by an RSI in agreement with it. All that BS. All right, let's keep going. Oil starting to bottom out as anticipated. Right. And so now when they talked about in the letter, in the video, was, okay, this is making this big move down. What is the dollar doing? And we need to see some kind of a reversal. And we had a stall yesterday in that. And so we need to see the euro try to stabilize opposite of the dollar. It's trying, which then leads us to part of what we talked about as well yesterday of, well, maybe these oil ETFs can get a reprieve from their death sentence of this and get a little bit of a move up. Exactly. This is what I didn't show the dollar futures, but in the video, I showed this and it's like, okay, this is up at resistance. It would make sense that this stalls and the dollar starting to retrace a little, and that would then give crude oil, that's gold, crude oil, a reason to turn up for at least the short term, right? So a little intermarket analysis there. Bonds, right? We do that in the advisory letter, when appropriate times. Bonds pulling back a little bit, getting a little whippy and confusing there, but bullish weekly chart. And I think I am done, so Dan can get to the opens. Okay, let me know about 3340. We'll talk about it in the room. It's getting late here. I'll type.
All right, good morning. Yeah, I was looking at XLE yesterday, and I like this one the best of the oil ETFs because it went up more, higher low, whereas the other ones didn't. Now it's gapping up. Still at resistance, but we'll keep an eye on 30-minute high. A couple here from yesterday I'm still looking at. Burl, that was a beautiful gap play yesterday. No-brainer 15-minute high. Allstate we're watching. Ulta we're watching as a put spread. DXCM as a breakout. It looks like it's a gap breakout here. It looks good. Hain I like with a big target. Daily, weekly, monthly are in agreement. CCI. That was a beautiful gap play yesterday too. Wow. All our opens are fine, except we have a core long on Lyft, and we legged into a covered call, and there's no way around it. If you're going to hold a stock over 3 months, you're going to have to sit through earnings. And our method of dealing with that is selling out of the money calls. We were short the 53s, which because of the big move up, we're actually in the money. Now it's gapping down. Our stop is under the big bar, which is 50.33. So we're still fine. Our cost basis is the low 48s. No, we're fine. No, I'm explaining it right now, Alex. Even if we're stopped out here, we still made over $2 because our cost basis is we were in this, I think on this day. We've been in this since Jan 21. See it, 48. We've been selling calls against it. Let's go to gappers. Ugly gap here, nothing to do. CAG, McGraw, you gave me this. It's bottoming, but it's still strong. Daily, weekly, monthly. I like today's Wednesday. So Monday's little breakdown failure I like. So it's not ready, but it's a watch. tap, big gap up, no pattern. Avgo, it's gapping up here. I like this as a put spread. Let me give you all the few adjustments I did pre-market. I actually gave you two of them right here. Oh yeah, we're in, that's right, Microsoft. We're in a bear call credit spread. It's fine for now. I mean, I don't like the gap, and I said, let's add on a bounce. We got a horrible entry yesterday, and I know that. I wish I saw it. I mean, here was a sell setup, would have been perfect. And then right here, a breakout failure, 2-bar reversal. Right there, that would have been ideal entry right there at 187. Right there. You know, when we sell spreads, we're just calling a short-term top or bottom. That's a nasty reversal. So we're short the 190s for Friday. So Avgo, I like a put spread. ANAPS, it's McGraw, you gave me this. If it can break out, it'd be fine. Light, I gave this yesterday. Bullish consolidation in the upper 50%. LBS got an upgrade. No pattern. Win, upgrade. No pattern. MU, upgrade. Almost 59 bucks. No pattern. Alex, light, I gave it as a put spread, and it did not get filled at the desired credit. And I had it ready to post as a long, and I didn't post it. So no, we're actually not in it. NCR, I see one little print, 3250. If it is opening there, that'd be a bearish gap, maybe a call spread. LSCC had earnings. Look, here's a textbook W pattern. Came down, bounced a little bit, retest, time symmetry, space symmetry. That's a W bottom. It's textbook. 20. If you can get a put spread on that McGraw, because it had earnings, so volatility might be a little high. DIOD, 51 bucks. No pattern, but it's a buy setup on the weekly, so that's worth watching. Akamai, it's a big gap up to all-time highs. We'll watch it on a pullback. EXAS, a small bearish gap, but it's a mess. Whiskey Uniform, this was the one I would have given as a long over the high, as a 1, 2, 3. That is a quality 1, 2, 3, but it had earnings. And you know, we just for swing trading, we don't hold over earnings, just for core trading. So it's gap in the 20s. That's a very bearish gap now. So if I were in that for whatever, swing or core, I'd be concerned. PRI's a mess. You're gone. NSP 69.30. Big old gap down here. AIZ, I can't tell where you're trading. I can't. These were earnings, but I can't tell what they're doing. 2185, gapping up a little bit, but it's no pattern. DEN, no pattern. Urban, big old mess. WNC, nothing. So y'all see, I'm trying to delete things, so I have less to focus on. 431. Hey, I just told Greg that I want to work on an MT Live of how to make money in stocks under $5. So I'm going to start grabbing some shots. Tango Whiskey, no pattern. Yeah, I have shop in here. I'm trying to go fast. 137 bearish gap. I have shop right here. 568. It's not a good gap and crap setup because it's gapping from a consolidation. We like gap and craps from fluid extended moves like Microsoft. Look, this thing went from 160 and then, it's not perfect, but this is what I'm emphasizing. You want a big fluid move, then gapping, then it's more of an exhaustion gap. But it still might set up intraday. I'm not saying we won't. I'm just saying it's not a textbook gap and crap setup on the daily. BGG, all-time low, maybe include in your, yeah, we can, I'll have patterns in there, which are death trends. Absolutely. Remember that little movie company? The Ticket something or other? Ticket something that it reverse split. It was $2,400 and went out of business, and it's trading for a half a penny. Cyber, that's a nasty gap. Nothing to do with it. BBBY, this is the disaster du jour of the day. That's just pain. CVS, no pattern. Crowd is still on my list. STE, wow, that was